Fred Dickson, Chief Market Strategist at D.A. Davidson. And Fred, let me start with you because David Rosenberg, a known bear, he says the proof will be in the pudding when the stimulus measures start to be withdrawn. So he's not so optimistic when you look at later on this year. Do you agree when we start to see that stimulus pulled back?
Well, I think we've seen the economy slowly recover during the year. The stimulus has not been a big factor. It's starting to kick in now. I think it
hasn't been a factor at this point.
It doesn't appear to be a big factor from our point of view.
Really?
You can just take a look at the dollars that have hit the economy. I think there's been the bigger surge has been consumer spending has come up with consumers basically coming back into the marketplace and buying deferred items, business inventories and technology spending picking up. But the global expansion has been a real big kicker. We're looking to see federal spending accelerate during the summer as all you had to do is look at the timetable when the spending was going to be released. And I'll agree with David and say that it will be interesting to see what happens afterwards, but there are a lot of other factors going on.
I wonder, the idea that David is making, or the point that David is making, is that it's hard to pass on from public to private this spending role, and he will argue that it hasn't been done. Are you seeing that happen, the baton being passed to private industry?
Well, corporations have a lot of cash, and they're at this point starting to spend that. They realize that they have to investment spend on technology, they have to investment spend on inventories. They've been very, very cautious. The entire economy doesn't entirely depend on federal government spending. It requires confidence on the part of consumers, confidence on the part of investors, and confidence on the part of corporate chieftains. And we're seeing that pick up. So,
but that's interesting. But when you got Intel's numbers last night, even so, I think their headcount hadn't changed in the last quarter. So maybe they're more confident. Maybe those numbers look good, but they're not necessarily hiring.
They're not hiring. They at this point are waiting to see whether the sustained pickup is going to continue. I think that there's been a lot of pushback waiting to see what the real ramifications of healthcare reform are. That's been a big thing that we hear from corporations, particularly the little companies. And at the same time, consumers at this point are still a little reluctant to pick up their spending because of Washington.
Fred, let me bring you back into this because when Matt mentioned about David Rosenberg talking about maybe a 15 to 20% markets being ahead of themselves, you kind of raised your eyebrows. You don't buy it.
I don't think we're that far ahead. I think the spring surprise is going to be the fact that companies are going to come in with better than expected revenue and earnings. They're going to top the charts. And we've had a market that's been pretty skeptical that would happen. If you take a look at the retail sales numbers out earlier today, we looked at some of the business investment numbers out there with the GDP. It was pointing to an economy that was gaining some strength on its own without that federal government spending. Valuations are still reasonable. Technically, I would say we are extended. We agree with that. Wouldn't surprise us at some point to see the pullback, but we're at the top of the first inning of earnings reporting season. The first couple big batters have come up. They put, Intel we consider hit a big home run yesterday. JPMorgan a nice solid double. And now we'll see the next big batter coming up is GE on Friday. It's setting the tone for a decent earnings season that I think is going to catch people by surprise.
Fred, let me bring you back into this conversation because, we're watching the tremendous growth that we're seeing in China, but at the same time, we also continue to hear things from officials about looking to tempering some of that growth. I mean, if they make some significant moves, could they slow down Chinese growth enough to kind of maybe cause a stumble, if you will, in this global recovery? I
think we might see a little bit of a pause. China's growth has been white hot. You look at 18 to 20% year-over-year growth in GDP for several months in a row, and that is a lot.
And even if you pull it in a little bit, so what?
Yeah, you pull in a little bit. Let's say it goes down to 11 or 12%. Some of our big global international industrial companies might feel it. Some of our metal producers might feel a little bit. It shouldn't have a big impact overall in the economy here. Might add just quickly a couple of things. Number one, as we look at the markets, I think we're now starting to see retail investors wake up. They're going to see 11,000 on the Dow. They're going to see 1,200 on the S&P. Those that are sitting on a lot of cash, and we have a lot of customers that have done that, will probably get a nudge from that to put some money to work. So that's something. And we haven't seen the real big pickup yet in IPOs or mergers. So those are things that we look at.
We had a busy day on Monday, right?
Yeah, we had a busy day on Monday, but you look back at Monday's past, and it was, it was calm for the early part of a cycle. So those are things that we would normally look at as gauges as to where we are in the cycle, kind of giving us confidence that this cycle has a ways to go. although likewise we could see from an extended level a pullback. Our guess is it won't happen until we get through the bulk of earnings season.
Fred, one of the things that the bulls and the bears seem to agree on as a concern is the housing picture. I mean, the bulls will say, hey, it looks like we're stabilizing. Jamie Dimon said housing prices are starting to rise, but you really don't get that picture when you look at the graph. I mean, are you concerned about housing still?
Sure, we are. We see foreclosures moving up. We see the number of houses, a number of people that are homeowners that are in trouble, either facing foreclosure or behind on their payments. That's going to keep a cap on the rise. A lot of the rise that we've seen over the last several months have been due to a movement off very, very low base as a result of foreclosure sales to first-time home buyers. Tax credit is off the table.
Right.
That's the area that I'm more interested in seeing from a federal program than some of the other things that David Rosenberg had mentioned earlier.